Testing, testing, 1, 2, 3. Testing, testing, 1, 2, 3. All right, so looks like Windows decided to do a forced update. So I had to update all my drivers. Nice, thank you, Windows. And then for some reason, thank you, Comcast, I'm only pulling 20 megabits per second. 20. I'm paying for 1,000. Something seems to be a little bit wrong. But anyways, welcome to Forex.Today YouTube channel, part of the Forex trading community. 12,500 Forex traders meet here every single day to align their satellites. We discuss technical analysis, fundamental analysis, risk on, risk off, swing trading, day trading, scalping, spot trading, whatever, man. So, ask questions, get involved, take notes. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of... Wait, I got thrown off here. Ron's like, our internet is slow after storm on Sunday too. Yeah, so we had tornadoes again here in Atlanta. So that's what happened to me yesterday. Anyways, let me start over again. Welcome to today's webinar. Let me remind you that today's webinar is education. This is not an alert service. I'm not here to make trade recommendations. I will conduct technical and fundamental analysis, and I'll do so pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this beautiful New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Nice, get on with it. Come on, Wayne. So, nice to meet you. My name is Wayne. I guess I should get this out of the way. I think it's okay down here, right? Probably right there is all right. So, nice to meet you. Currency trader. I've been doing this a long time. How many years? Like 5 times, I'm not sure how to do 15 or 16. But anyways, been doing this a while, seen a lot of things. This is my 3rd or 4th or 5th crisis. Yeah, boy. Crises are awesome if you know what to do. So I'm trying to be here for you, teach you how to play the game. Number 1 rule is survive. You can't thrive if you're dead. So anyways, so get involved, ask questions, treat your fellow Forex traders with dignity and respect. Check your negativity at the door, and we'll have some fun today. I suggest we go through the calendar, and then I suggest we go through some pairs, and I'll answer any questions that you have, and then we will call it a day. Typically, this takes 60 to 90 minutes. You guys on? You guys on board? Whoop, 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 whoop. That's the train. All aboard! All aboard! So anyways, thank you to tradersway.com for being the sponsor of today's webinar. In fact, the entire Forex.Today YouTube community. Thank you, Traders Way. Make sure you show them your love. Visit tradersway.com. Open up a demo account just to say thank you. Open up a demo account and then download MT4, download MT5, play some trades. Check out the execution speed, the swaps, and the spreads, and you should be super duper happy. And then when you're ready to trade real money, perhaps you'll choose them just to pay it back. Huh? Tradersway.com. Thank you. Cool. Nice. Oh, look, there's Traders Way right there. Hello, Traders Way. Cool. So this is the Forex.Today calendar, as they say in France. La 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 la. All right, so what's going on today? Not a lot in the New York session. So what does this mean? Any Trump tweet will take precedent over everything else? Suppose, huh? How about tomorrow? CAD news tomorrow. Retail sales out of the U.S. tomorrow. Aussie tomorrow. So these are going to move today. Right, PJ? Okay. Nice, 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 nice. All of these are actually quite good, right? So you know how to do Aussie Jobs Report. That's cool. We got Beige Book, the Bank of Canada interest rate decision. Fantastic, right? Retail sales. So tomorrow is a wonderful, beautiful, fantastic trading day. If you like news trading, what do you think? You guys like news trading? Well, the way I look at it is it greases the skids, so to speak. We've been sort of stuck for several days now, and maybe this is what breaks the ice flow, huh? What about earnings? Yeah, well, so like JP Morgan came out, right? What was it, 78 cents a share instead of $3? We're really worried about their loan portfolio and how many people, like their provisions for defaults, basically. And that's another one that's difficult to read. Did you guys review that this morning, JP Morgan? Anyways, their typical provisions are like 1.5 billion, and their provisions this month was like 8.5 billion. Yeah, let me say that again. Typically it's 1.5 billion. This time it's $7 billion more. Basically an expected defaults, right? But that's not 100% true either, because there's a change in the accounting rules, which under normal circumstances would have raised those provisions significantly. So we don't know that, and we don't know anything else. But whatever, it's bad. But we already knew it was bad. So yeah, the earnings are important, in particular if you're trading the stock market proper. As far as risk on and risk off, I don't think earnings would be that important for a one day. So like if JP Morgan gets repriced today and drops 4%, will that change global macroeconomics? No, probably not. Okay. Well, Maurice, you can go to COT anytime you want. Okay, right there, COT. You can do that anytime you want. So anyway, so pretty thin today here. Okay. And then tomorrow, awesome trading. And we should have CPI in here somewhere. I guess maybe we already did it. So anyways, cool. Nice. So good. So tomorrow's going to be a good trading day. So you might want to watch CAD and Aussie today, right? Now, right as we speak, where'd my drawing tool go? Oh, way down here. As we speak, this looks like risk off. Of course, it's yellow. Why would anyone want yellow? There we go. Let's do it again. This suddenly looks like risk off. Okay. So we got to be a little bit careful here. Is it just emerging markets, or is there something more? Well, what else would be an indication of global macro trend? Well, oil, as you guys know, is still coming down quite hard. All the way back to 2150. So we had two levels of support. I think it was 22 and 20. So it's dropping below today's buy zone, in fact. So if you were a buyer of crude, you would have been very interested in this zone around 22. And the fact that we're significantly below, in fact, kicking off 22, right, means the buyers didn't buy. I don't know if that's bearish, but right, it can be. I mean, that looks bearish, but we certainly know buyers didn't buy. So that's very interesting. So those are two risk-off sort of macro plays. And that's kind of interesting, isn't it? So that means Bitcoin would come down. Okay. Here's the sell zone for Bitcoin. And you're like, Wayne, there's so many lines in the chart, I can't figure it out. All right, well, let me help you. Oh, I want to do, where is it? What do I call it? I need to rename all these. I don't want swing trading. What do I call it? Brain fart. Oh, here it is. So we want bearish. And let me click down. Okay. So here's where we started the week. Okay. And this is a sell zone. A lot less colors on, right? That's the one thing for the week. Right? And the interesting thing is we knew that when price was way down here. So the general idea is, if you're a bear, is we were stuck in consolidation, breakout, pullback, sell zone off of 7,000. Okay, which is here. It's plausible. What do you stink? Smell like a plan? So a bear is going to want this now, and we just happen to see risk off in other markets, so that would be good for a bear. Grinds us down to somewhere around 3K for Bitcoin. Yeah, well, that's our old analysis, so that doesn't necessarily ring true now, but maybe, right? So we would have to look at it differently, okay? So it doesn't have to necessarily go here, but it certainly could, right? You could see 4,000 could just be as legit. And so now you're like, yeah, well, there's only $1,000 difference. You're like, yeah, it's only $1,000, right? So anyways, yeah, I get it. The obvious part here is the role reversal, right? In fact, typically I'd grab that bottom and do that and bring it there. And so that's how I would do that, typically. Yeah, we'll do USD CAD, of course. Okay. Well, so if you want to look at what the charts say, it says 6,200. Okay. So, right, grind's like, oh, or maybe 6.5 is more reasonable. Well, right now, 6.5, yeah. The thing with 6.5 is it wouldn't make the market much bearish. It'd be basically, if we bounced there, then it's still sort of more bullish than bearish. So if you're a bear, you're not thinking 6,500, you're thinking 6,200, and then tomorrow 6,800, and then next week down here to 5,000. So you're thinking off of 7,000 down to 6,200, up to 6,800, down to, we'll call it 59. Okay, so that's what I'm thinking. What does this draw? Down, 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 up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 down. Okay? I'm cruising, I'm bruising, I'm never, never losing. Alrighty then. Alrighty. USD Akidikada. Okay. Let me do something different here. Around the way is where I'm from, and I'm from Manhattan, and I'm not a bum. Cool. So, look at the tools we're using here. Notice last week we drew this horizontal line around the psychological level of 1.4. Notice that we got multiple regression channels pointing down. Notice that we have the price action of down, 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 up, up, sell, down, 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 up, up, sell, down, down, down. Well, no lower low, but anyways, and then breach. Okay, so we got all that going for you. Now, risk off would push us up, but nonetheless, let's stick with where we are in the process. So the bigger process is this, right? So the question is, like, when in here, are you patient enough to be in that rollover? That took a whole week. Or are you pushing it? Well, Adam, that probably has to do with quantity of American oil versus British oil. Well, thank you, Anthony. Thank you. Actually, I was up to midnight again last night. Work, 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 work. Keeps me from being a dull boy. Okay. Are you guys patient enough to live through something like that, or is that where you give up your pips? That's the big question. Something to think about, I imagine. Grind says, hey man, why is gold spread fluctuating so much? Well, that would have to do with market conditions. So you might be selling when no one wants to buy from you, for example. If so, you got to stretch farther to find someone that would sell to you. Okay? That's how spreads work. Okay? It's like you want to buy a 1957 Porsche Speedster in good condition. One that is drivable, but not too expensive. What's the odds someone in your neighborhood's going to have one? 0. What's the odds that someone in your city have one? Pretty low. What's the odds that somewhere, if you lived in America, somewhere in America, someone's got one? All right, you can probably find 4 or 5 on YouTube. Okay? You see what I mean? So, depending on the market conditions, how far do you need to go to find a car to find a seller? Well, right, the spread, the distance between you and those sellers, right, depend on the market. Now, if you want to buy, I don't know, what do people buy? Honda Accords? How many Honda Accords are in your neighborhood? 50, right? So the spread would be narrow. Anyways, that's how to think about it. It has to do with market. So anyway, so we got a trend going here. Your bias is going to determine whether you believe this is going to be a down. So if you're still following this on a daily basis, this is the trade plan. Okay? So this is what's been happening the last week, right? We've been neutral here. Neutral, 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 neutral. Remember I drew this? Check it out. Break, pullback, sell. Down, pullback, sell. Down, pullback, sell. Down, pullback, sell. So what did we say yesterday in the day trading group? Down, pullback, sell. And if you're a bear tomorrow, you will look at something like down, pullback, sell. Okay. Of course, you wouldn't do that on a 4 hour, but you'd probably do it on a 1 hour. And you get this. Okay. Breach, sell, down, sell, down, sell, down, sell, down, sell, sell. Okay. Now, today we noticed in the exotics a risk off move, and that would put risk on this because a risk off would pull this up, and then tomorrow would be a buy zone, not a sell zone. So you got to really pay attention here and use your bias to filter through this information. Or if you make a trade, just be aware that if the exotics are, and oil falling, are indicative of a change in sentiment, then you don't want to be too brave in your trading. So let's say here's the upper range of this move. Okay, so if you sold here and it popped up, you should be very careful. Okay, your trade plan is this, this, and this. And by the way, this is what we did 12 hours ago. Right, we had this as our sell zone. Okay. Oh, thank you, Daniel. Yeah, Daniel, typically if it's very rare that I don't show up for a webinar, but if you just type in like Atlanta weather and it shows you that there were like multiple hurricanes, or sorry, multiple tornadoes, you're like, yeah, that could be it. Could be a rabbit, could be. Okay. All right, so anyways, was that helpful on the US kitty cat? Hey, by the way, Crypto Rage, have you gone through the video training course recently? Like in the last couple of days? It should be fixed. Everything should be working fine. The videos play. They're all the right videos. Okay? I had to yell at the programmer, which is another way of saying I just had to fix it myself. Right on. Fist bump. Thanks for your patience, guys. Enjoy the videos. Yeah. Awesome. Very good to know. Oh, yeah. Did you download it, Gary? We talked about that over the weekend, right? Did everyone see my video I posted on the weekend? Cigars and papers, cigars and calendars or something. Gars and calendars. Greg, we'll keep it normal for now until I figure it out. But anyways. Thank you, Anthony. Cool. Gary's got it. So, Gary, are you volunteering to do a presentation tonight at the meeting? Garsondars. Calendars. Seagalendars. How about cigarlandars? Anyway, so Over the weekend, I did a video where I went through the newspaper as I smoked a fabulous, super premium, very rare Monte Cristo called the Monte Cristo 100 Days, and I went through the Barron's magazine, the calendar, and I did a review of a high yield junk bond hedge fund manager. Was that right? For some reason, I thought that was tomorrow. Just a brain fart, I guess, huh? Hang on. See if we can bring that sucker up. Yes, I'd be happy to cover euro dollar. Well, the point with him, you know, is he only lost 12% or 15% in the month. So he lost, I think the way it went is he lost $500 million of his client's money, but he still lives in his mansion, still drives around in a Bentley, you know, too bad, so sad, right? All right, so IMF live press conference. They're like, yeah, it was a tough month for my clients. How funny. The World Economic Forum. 175 people watching. Oh my God. If this was like, I don't know, a soccer match, it'd be 175,000 people watching. Let's talk about your money. Oh, I don't know money. Money's like math.
About what the economic landscape will look like.
188 people. We just doubled the audience. Oh, IMF.
In the second quarter, in most countries in the world,
yeah,
and recedes in the second half of this year, we are projecting global growth in 2020 to fall to minus 3%.
Uh-oh, she's
this
stumbling.
Is a downgrade of 6.3 percentage points from January 2020. A major revision.
Looks like Gary's off the hook.
This makes the great lockdown.
I'm going to throw down a thumbs up, guys. That's the kind of guy I am.
Far worse than the global financial
huh?
crisis.
Look at that. That's who I am.
Boom. Half of 2020, and that policy actions taken around the world are effective in preventing widespread firm bankruptcies, extended job losses, and system-wide financial strains. We project global growth in 2021 to rebound.
It's kind of like kids watching kids watch kids play Minecraft.
Now, this recovery in 2021 is only partial, as the level of economic activity is projected to remain below the level we had projected for 2021 before the virus hit. The cumulative loss to global GDP over 2020 and 2021 from the pandemic crisis could be around $9 trillion.
$9 trillion.
Than the economies of Japan and Germany combined. Now, this is a
so we actually kind of talked about this last night at the day trading group.
Countries reliant on tourism, travel, and entertainment for their growth are experiencing major disruptions. Emerging market and developing economies face additional challenges. They face unprecedented reversals in capital flows, major currency pressures.
Well, you're a customer. It comes down to this. Your spending is somebody else's income.
To support their economies.
So
for the first time,
right, to quote W. Arthur Lewis, it's a vicious cycle downward.
Emerging and developing economies are in recession. For 2020, growth in advanced economies is projected at minus 6%, Emerging market and developing economies, which typically have normal growth levels well above advanced economies, are also projected to have negative growth of -1% and -2.2% if you exclude China. Now, income per capita is projected to shrink for over 170 countries. Now, we're projecting recoveries for both advanced economies and emerging and developing economies in 2021, but that again is partial. Now, what I have described is a baseline scenario, but given the extreme
Well,
uncertainty around the duration,
17 million people applying for unemployment insurance in a 3-week span
scenarios,
might be one measure of a recession. Maybe not traditionally, but it's not good.
leading to longer containment periods, worsening financial conditions, and further breakdowns in global supply chains. In such cases, global GDP would fall even further.
Maida, it's at youtube.com/FXBootcamp.
And if the health crisis rolls over into 2021, it can reduce the level of global GDP by an additional 8% compared to the baseline. Now, moving on to what are the important policy actions that countries need to take. Firstly, on the health front, flattening the spread of COVID-19 using lockdowns allows health systems to cope with this crisis, which then permits a resumption of economic activity. In this sense, there is no trade-off between saving lives and saving livelihoods. Countries should continue to generously support their health systems, perform widespread testing, and refrain from trade restrictions on medical supplies. A global effort must ensure that when therapies and vaccines are developed, both rich and poor nations alike have immediate access. Now, while the economy isn't shut down, policymakers will need to ensure that people are able to meet their basic needs and that businesses can pick up once the acute phases of the pandemic pass.
HH, how much value has your house lost if you don't put it up for sale? Nothing. So nobody's selling, so prices haven't come down. Only sellers have to lower their price.
This support should continue throughout the containment phase to minimize persistent scars that could emerge from subdued investment and job losses during this deep recession. Policymakers must also plan for the recovery. As containment measures come off, policies should shift swiftly to supporting demand, incentivizing firm hiring, and repairing balance sheets on private and public sectors to aid the recovery. Now, fiscal stimulus that is coordinated across countries that have fiscal space will magnify the benefits for all economies. Now, moratoria on debt.
Do you guys have any fiscal space?
Restructuring may need to be continued during the recovery phase. Now, multilateral cooperation is vital to the health of the global recovery. To support needed spending in developing countries,
I've just never heard of that language before. For those who have the fiscal space. Oh, you want fiscal space, baby? I got like massive fiscal space.
To ensure that the world does not deglobalize, so that the recovery is not damaged by further losses to productivity. At the International Monetary Fund, we are doing our part. We are actively deploying our $1 trillion lending capacity to support vulnerable countries, including through rapid dispersing emergency financing and debt service relief to our poorest member countries. And we are calling on official creditors to do the same. Now, there are some hopeful signs that this health crisis will end. Countries are succeeding in containing the virus using social distancing practices, testing, and contact tracing, at least for now. And treatments and vaccines may develop sooner than we expect. But in the meantime, we face tremendous uncertainty around what comes next. Commensurate with the scale and
that's a good one,
speed of the
Jean-Guy.
crisis,
Yeah.
domestic and international policy responses need to be large, rapidly deployed, and speedily recalibrated as new data becomes
Gita!
available. The courageous actions of doctors and nurses around the world need to be matched by policymakers so we can jointly overcome the crisis. Thank you.
Thank you very much, Gita. Thank you, everyone, for joining us again. So we do have a number of questions that have already come in. Maybe I'll start.
These guys were born for the camera, huh?
And then I encourage you to keep on sending those questions. So the first question I have is from Phil Aldrich from the Times of London. The question he has is, this is the deepest recession since the Great Depression of the 1930s.
Gee
But
whiz,
how
I hate
was
all
that,
this
to
hyperbole.
clarify the comparison? And countries will be left with dangerous.
Why is every crisis the worst crisis ever?
Will we
Gee
need to see a
whiz.
period of high taxes once the crisis is passed to bring debt back to sustainable levels?
So during the Great Depression, so if you look at the period between 1929 and 1932, for advanced economies, the contraction was around 16%.
This is cool. This is like a high school debate being filmed.
The recession that we're seeing right now, the contraction for advanced economies projected is around 6%. So clearly, the magnitude of the collapse was much worse.
It's a high school debate, huh?
Now, in terms of the global output, of course, data was more scattered at that time during the Great Depression, but the numbers that are out there are about a contraction of about 10% globally. And right now we have a contraction projected for about 3%. Now, this crisis requires timely action by governments, and that involves spending on the health sector.
Everything looks like risk off still, guys. We're tickling 21.
Quite substantial. So we are projecting debt levels to go up quite significantly over this next 12 months. The question is what happens next? Now, because we have a recovery that we're projecting for 2021, our debt to GDP levels will stabilize going forward. And the question is, how do you bring that down, or how do you finance that? As long as interest rates remain very low, as we're seeing, and we get the recovery that we're projecting, then the combination should help in bringing down debt levels slowly over time. Now, there will be some countries in the world that would require help, external aid, debt restructurings, but we'll have to see what that looks like once we come out of this pandemic.
Thank you. I have a question here from Eric Martin at Bloomberg, and the question is on the report.
Look at the camera.
The World Economic Outlook only considers downside alternative scenarios, not upsides.
I love it how the men don't even comb their hair going on TV. Don't even worry about the hair thing.
And can only get worse from here. Question.
I think the best
He kind of half tried. The other guy didn't at all.
The tremendous uncertainty about the outlook going forward. Downside risks prevail right now if you look at the developments around the world. Now, of course, that said, there could be positive news. There could be new therapeutics develop very quickly, and things could turn much better. But right now, as we see it,
I'm getting better.
So we have explored the scenario where the pandemic can
Why didn't it reshape?
in the second half of this year, which is what is assumed in the baseline, continues. And even worse, that there are outbreaks in 2021. If that happens, you can get a further substantial hit to global growth.
It's weird. It's not resizing.
Thank you, Gita. So
everyone looks so shy and stuff. It's really cute.
AFP. She asks, what are the fund recommendations for governments to ensure a solid recovery when the pandemic is over, especially for advanced economies?
The strength of the recovery, firstly, is going to depend a lot on what governments do now during this period of containment. So it's very important that during this period of containment, governments provide the necessary support, economic support that's required for households, so that they can meet their expenses.
Yeah, but your customer,
Firms
if your business doesn't have money, it should go
prevent them
bankrupt.
from going bankrupt and becoming, exiting the market. So those
That's the
measures
whole
are very
point of
strong
bankruptcy.
alongside
But in America, bankruptcy doesn't have a negative stigma.
to actually contain the virus. Once the recovery happens and we are past the pandemic phase, for advanced economies, it would be essential to undertake a broad-based fiscal stimulus. And this would be even more effective if it were coordinated across all the advanced
So it looks like we tickled 21.
that would be one important step. Monetary policy should, of course, be data-driven, and if inflation stays well below targets, interest rates should also stay low for that period of time. And given that we've lived through this crisis, it's very important to prepare and to prevent something like this from happening again. So this would require building health systems around the world even more, sharing more knowledge, and being better prepared the next time around.
Thank you, Geeta.
This area in here will also be interesting for Bitcoin.
Region-specific questions. The first ones are on Asia. So this is a question from Zhang Qi. So the question is, though China is gradually resuming normal economic activity, China will still be influenced by the supply and demand disruptions of the rest of the world due to the containment measures. How is the fund evaluating this as an impact on China's economy? Given this factor, will China's recovery be more of a U-shape or a V-shape?
So China was
They ask such stupid questions. It's unbelievable.
it was the epicenter.
That's the problem with the media, that half of them don't know what they're talking
In
about.
the second quarter, measures have started to come off. Containment measures started coming off towards the end of the first quarter. And so we are seeing signs of recovery. But again, we have to keep in mind that the rest of the global economy is now in the grips of the pandemic, and there are severe containment measures around the world. So that will have a big negative impact on, in terms of external demand on China's growth. I'd like to bring in Malhar over here if he would like to add something
Yeah.
to this question. Malhar?
Good morning, everyone. Yeah, I think the Chinese, as you pointed out, Geeta, the first quarter contraction in activity is expected to be.
So who's this guy and why do we care?
But it's
There he
important
is.
to recognize
Division
that,
chief.
There are signs of normalization now. The economy is getting back to operating. It's a very gradual normalization. The economy has policy space to support the recovery. With the spread of the pandemic to other regions, especially the important trading partners, there are going to be strong global headwinds to the recovery for China. But overall, with the momentum the economy had going into this crisis and the policy space that the economy has, we think it's poised to register positive growth this year, albeit modest positive growth relative to the strong growth rate.
Senior forehead.
Seen from the Chinese economy in the past.
Thank you, Geeta and Malhar. So I have another
Rand's still getting crushed,
on,
showing
Asia.
signs of risk off, faux
This is
show.
from, Republica Daily in Nepal. How do you see the economic fallout of COVID-19 in the low income or poor countries like Nepal? What recommendations do you have for them?
Well,
to
Nepal,
revive their economy
you were poor before
after the
COVID-19. You're
health
probably going to be
crisis subsides?
poor during COVID-19, and you'll be poor after
Countries
COVID-19.
that are low-income countries, the challenges of this crisis are just manifold. On the one
So
hand,
Beast just, or not Beast,
a health crisis,
Pound Dollar just doing his thing.
health
Up, up,
systems
up,
that are
up, down,
not
down,
as
buy.
strong
Up,
as
up,
we
up, up,
expected.
down, down, buy. Up, 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 and it just bounced off tomorrow. If you're front running tomorrow,
This is a big
Pretty
hit because
standard.
one of the sectors that has been most hit during this crisis is travel, tourism, hospitality.
right? So you're a weak U.S. dollar is risk on, so you have to decide which one you are.
At this point in time, it is important to do whatever it takes
Basically, the U.S. dollar is weak
to
because we
make
just
sure
printed
that
3 trillion of
necessary
them.
spending is done. It's also very important to support your workers. Now, many are there in the informal sector. That would require using mechanisms like cash transfers, using digital payment systems in countries that have those, to reach the daily workers who work on daily wages. At the same time, support small and medium scale enterprises so that once this pandemic ends and there is a resumption of global activity in all parts of the world, that these countries can also improve. I also would like to mention that for low-income countries that have high levels of debt burden, it is very important for creditors around the world, official creditors around the world, to step up and provide debt relief to these countries.
F you, pay me my money.
All right. So I'm going to switch regions and go to a number of questions we have received on Europe. So the first question comes from L'Opinion in France, and the question is, I would like to know why the 2020 recession you're forecasting for the euro area is worse for that region than other regions.
There are a number of variables involved there. So one, of course, is if you, for instance, compare the euro area numbers to what we have for the US. Now, the euro area started with lower projected growth, even in 2019, compared to the US. And so that's why the numbers look much lower now, though the revisions are approximately in the same ballpark. In addition, you see, compared to many other parts of the world, the euro area, Europe has been hit very hard by this crisis, and that is also another factor that plays an important role. I'd like to bring in Gian Maria here to see if he would like to add something.
No, I think you've touched on the main thing. It's really the severity of the epidemic, and in a sense, we
Here's
are
the
in a
guy.
position where
He's like, I'm going to comb the left side of my head only.
slowing in Europe, but we are a bit ahead of where, unfortunately, other countries may be heading. So we've really seen the worst hit to global activity, and that is fully reflected in our current forecast. That's the main reason for the relative pessimism compared to other regions in the world. So Europe is a very open. European countries are very open to international trade. Many of them.
I think the gray suit, the gray tie, and the gray shirt says it all. Huh?
Reliance on tourism. Those are all sectors that are hit very heavily by the crisis.
Thanks very much, Gita and Gian Maria. So I have another question on Europe, again from our colleagues at Agence France Presse. The question is, given the huge increase in debt and deficits, how concerned are you about the future growth potential, especially for Italy, Spain, and France?
This crisis, we have to first start by reminding ourselves that this crisis is a truly exogenous shock. And
Oh, exogenous shock. You got to do a shot of tequila.
that's required for firms, for people. So the deficits are called for. What would this look like going forward? A lot, again, depends on the interest rates at which countries are borrowing and the interest rates at which they would have to roll over. Now, in the euro area, the substantial support being provided by the ECB on this front
EZB.
is helping keep borrowing costs low.
My
for
zigzag
many countries,
keeps
including
disappearing.
Italy and Spain. And as long as that is the case, going forward, once there is a recovery, we should see these debt levels coming down. Now, of course, there is a tremendous uncertainty about this crisis. There could be much worse outcomes. There could be much greater vulnerabilities across the board, including in the banking sector, and one has to keep a close eye on that.
Thank you, Gita. So another question on Europe, and this one is on the UK. So how does the UK's economic response compare to other nations, and would you encourage the UK Treasury to do more to support businesses and the economy? This is from Michael Blair at Sky News.
UK has taken a very aggressive approach. They've come in with large, substantial very carefully targeted measures. So they have done all the right things at this point. Considerable support to firms and to households and to the financial system. I'd like to bring in John Mireya if you would like to add something.
No, absolutely. Has been a very powerful response both from the Treasury and from the Bank of England. This is absolutely essential to allow the economy to restart. I would like also to refer back to something that Rita said earlier in her opening remarks. We need, governments have responded very aggressively as they should have. They also need to be very nimble and able to adjust their response.
Look how they're getting spammed by XRP guys and stuff like that in their chat. What a silly world we live in.
The epidemic will be with us, and policies need to be adjusted accordingly.
Thank you, Gita Jamaria. So,
yeah, Samuel, read the beige book.
Here,
it's very interesting.
Question on the OPEC agreement and its impact on oil-producing countries. The question is, how does the OPEC agreement change your view on the MENA region and the Russian outlook?
The oil price collapse that we've seen recently.
Gee whiz, huh? These reporters are so stupid. All right, for all the countries in North Africa and the Middle East that produce oil as a #1 export, how will they be impacted by record low oil prices? I'll handle that, Gita. They're not going to make much money. Like, gee whiz. All right. So this is why I don't watch the news. I get all pissy. I think what they should do is put smart reporters in the room and ask these guys, because these guys are smart. And by the way, the IMF has their own math. I don't know if you knew that, but they have their own math when it comes to economics. They use sort of a fuzzy logic. It's sort of they sprinkle it with behavioral finance. So they're very, very smart, right? So they should be asked intelligent questions, and you'd be surprised how wonderful their answers are, but you're asking them to count to 12. And then the next reporter's like, well, can you count to 20? And then the third one is, okay, yeah, but can you count backwards from 20? But that's what happens when you put a bunch of journalism majors in a room with a bunch of economic PhDs. Right? Yeah, curveball! What does it all matter? How about that? Why don't we keep everything open? I don't know. Anyways, who cares what I would ask? I don't think I'd ask anything. I get it. Okay. So anyways, all right. So what's going on here? This is a bearish trend. Philip says they're looking for sensationalism, but they're not even asking sensational questions. How will the Middle East be affected by low oil prices? Like, what kind of question is that? Like, really? That's the question. Well, you know what? They're not going to make as much money as they used to make. It's not very sensational. So anyway, down, 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 up, sell, down, 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 up, sell, down, 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 down. Shields up, red alert, burp, 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 burp. Down, 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 up, sell, down, 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 up, sell. Down, 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 down. Tomorrow, up, sell, down, 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 down. The big question, what we were talking about yesterday is if you were a bull, you wanted sort of this, and 22 wasn't really a good number. 22 didn't really tell you anything. What you wanted as a bull is to be above 25. So I'm like, well, 22 is stable, but why, but it doesn't tell me much. Like, it could go up, but why didn't it already go up? And then the real support is at 20, not 22. Is what we talked about yesterday. So I'm like, at 22, it's neither here nor there. So for example, with this drop, notice this, we call this a roll reversal. Okay. Even if 22 looked good to you price-wise, like, since when do we buy lower lows? Right? Like, I can see kind of like this off of 25, but 22 is weird. So the question you really should be asking is, are you going to buy it at 20? Yeah, Daniel, that would make sense. Okay, so are you guys making that determination? Alchemy is like, hey man, well, how about 17? Well, we ain't at 17, nor are we at 15 yet, Greg. So you could say 15 or 17, but that's not the nearest level of support. So it's not worth discussing yet. So, right, this is still a very likely course of action because it is the current level of support. So I'm not saying 17 or 15 aren't the numbers. I'm just saying they're not in play now, so they're a figment of your imagination. So the only thing matters now is between 21 and 20, are you a buyer? And what are you looking for? What kind of, are you looking for a double bottom of a double bottom? Right? Double bottom of a double bottom. Are you looking for a moving average crossover? Are you looking for an oscillator crossover? What are you going to do as we tickle this 20 area? Okay? That's how I break it down. Right? And then if it breaches that, then we can talk about that next level and that next level. So, I mean, you could do it this way. You could say, I have a plan A and a plan B. Plan A, buy around 20. So we know this is the area between 21 and 20. So we buy a zone between those prices. And then plan B would be buy the next low. But I find it difficult to buy a lower low. So I'm interested at 20, not because of anything except it was supportive before. I wouldn't have known that here. I mean, you can guess the psychological level, of course, but it's more of a buy when it's been support. Okay. Now, I could see this happening in the next 6 months. Well, anyways, that could happen. Let's say in the next 12 months. But you can't really carry trade this to much effect. The negative carry on this is like 10% a day. Okay. I think it's more like 8% a day. I think you're paying like $80 a day per day on a $1,000 investment. Right? Yeah, but Alex, that's what you want. You want that. If people are going to drop $1 billion on this, you can anticipate that and be ready and take advantage of that. Okay? So make your plan, guys. Are you going to look for evidence, on a 15-minute chart? So you can get rid of all the other, right? All the other things. You can get this naked here. Okay. Maybe I'd look at it differently. Let me change the template to this. Let's do market in this case. All right, here's a way to play it. You are on a 15-minute chart. Somewhere between 21 and 20, the 21.55 will cross up and you'll be a buyer. That's it. What do you think? If you're like, that's too slow, then you cut it down to here. So let's test out this previous trade. If you use the same logic, you would have shorted this London Open, and you would have been short all day. So you would have shorted around 23, and we just hit 21. So you would have picked up $2,000 profit for today per contract. And you traded a 21.55 cross. Complicated stuff. So the thing is, you should be planning that now. Okay. So there's an hour a day where trading stops, as you can see, and it gapped. But notice this, down, 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 up, up. Lower high. Well, Nim is talking about hindsight. Here's the thing, Nim. If you are a bear, you have foresight, not hindsight. So what kind of information are you looking for as a bear at the beginning of the day? Well, you look at what happened yesterday and you say, okay, we hit a high right? And then it came down hard, right? Then there was the retracement, and then we closed the end of the day this way. So it formed a pattern like this. Down, down, down. Oops, come on. It's supposed to be pink. There we go. Down, 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 up, up, down, 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 down. We also know the way pivot points work is the close represents sentiment. How did the market feel? Did it close low or did it close high? That'll tell you the way that the day ended. Okay? So when you're here, Nim, it's not hindsight trading. As a bear, you take in this information and you make a decision. Now, when I looked at it yesterday, I said, it's kind of neutral. It's one way or the other. But I'm really sort of at that place anyways. I looked at a lot of charts and a lot of things look neutral. Well, so I'm going to interpret this as neutral. If you are a bear, you're like, you've already made the decision to sell. You're not neutral. You're bearish. You're going to sell it. You just don't know if you're going to sell it today or not. So you look at the high, the low, the close, and you're going to think this is the next 2 days of price action. That's all foresight, not hindsight. Because you're planning that. You're like, well, this lower high, this role reversal, the lower high, is going to create a lower low. And the sentiment at the close confirms that. So between Asia and London, you need to get short. So what kind of tool would you use to help you decide when to get short? Well, how about the 2155 cross? So that's the only way I know how to trade NIM. So if you're not doing that, you're not doing it right. Yeah. That's how you have to think. That's how you process this information. Okay? So that's all foresight. So what would that kind of trader think about now? Well, we've basically printed a breakout. Do you think that trader thinks there will be a lower high? Well, there's always a lower high in a downtrend. And then where would they sell tomorrow? Well, probably this will be kind of an interesting area for them, and this will be an interesting level to them. So their plan A would be sell at 21. Plan B would be sell at 22. But we don't know if we're going to breach 20. So you have to, where I showed this gap here is when you got to be at your market and say, okay, so what happened yesterday, which is currently happening now today. So you're saying this tonight. So you're saying this in 9.5 hours from now. You're going to say, okay, well, what happened on Tuesday? And you pick out your high. You'll pick out your low, whatever. Let's say it goes down to 20. So this would probably move to a plan B. Your plan B goes away because you don't think you're going to come back that much. And your plan A becomes something kind of different. And you plan it out. And you decide whether a bounce at 20 is going to lead to a full-on reversal, or the no deal is we're on our way down to here. Right? So, for example, Mexico's like, F you, OPEC, we ain't cutting. Okay? And we talked about this. I talked about the game theory of cartels. And everyone is incentivized to cheat, right? So no one's really incentivized to be the one that cuts. So, in true sort of prisoner's dilemma, everyone's going with defect in OPEC. And so even Mexico's like, F you, Saudi Arabia, we defect. Okay? But that's how it's supposed to go down if you study game theory. Okay? So, that's how you do it. So what I'm trying to also communicate here is you already have a bias. You do your trade planning. And I'm already thinking about tomorrow. I don't know if this is going to go down to 20, but I keep adjusting because if I'm a bear, I'm probably going to still try again. Okay? We have a question about peso. Well, all exotics should be looked at in a similar fashion. Okay. Swiss franc, risk off. ZAR, risk off. Lira, risk off. Peso, neutral. But notice peso is neutral against dollar and dollar's weak. Dollar's weak currently. So if I were to be thinking ahead here, if I was a risk-off guy and I think the dollar would strengthen. Now, it's weak now because so many dollars have been printed and have entered the economy, trillions of dollars. But nonetheless, if you were a true risk-off player, you would say this. Now, if you had Mexican peso Japanese yen or Mexican peso Swiss franc, right? If you had MXN yen, or if you had MXN Swissy, I'm sure if you looked at it right now, that sucker would be a ton of bricks with 2 hammers on top. But right now, we know the dollar's weak, and we know exotics are weak. And so right now, nothing's happening here. Okay. And then lira. Okay, so lira is even weaker than peso. So, for example, if you believe things are bad and even likely to get worse, every single day you would be like selling Turkish lira, selling South African rand. Okay? This is all you would do. Okay? You say there's no way South Africa is going to get out of this alive. Okay? Or Turkey. Okay? These economies are going to have to borrow money because they can't print money. So what are they going to do? They're going to borrow money because they have to pay. They're going to have to pay. So that could be your analysis. And you're just doing this over and over and over. You're crushing emerging economies because they're going to be absolutely, completely devastated by the coronavirus. And they're going to go from 20% unemployment to 50% unemployment. And the government will lose any taxes they actually collect. And in that situation, to keep the lights on and to keep police officers and the military, happy, because the last thing you need is your military defecting. So to keep them paid, you can't just print money. Well, you can, but that won't last very long. Or the other thing is you just borrow money. So anyways, that could be your play. You're like, this is really bad. I'm risk off. I'm going to dump all the exotic currencies. Okay? But that's just one play. Okay? This Swiss franc, this Kiwi Swiss franc going up currently has been risk on. But when this is coming down, it's risk off. So you could say, all right, well, this was a nice dead cat bounce. But before any real recovery can happen, we're going to need some sort of bottom. What do you think, guys? Is that a reasonable opinion? That before any true recovery can happen, we need a double bottom? If that's what you think, if that's what you believe, if that's what you want to see, because you're the boss, you can make these calls, then you're going to say, I'm looking for a sign of a sustained move down that could last a couple of weeks. Okay? So this breached lower, but not trending, so it's not a sell. This breached lower, but not trending, still not a sell. This is breached lower, but not trending, still not a sell. But what if tomorrow you're here? You will sell hard. So see, Nim? Not hindsight. I'm not worried about today. You guys have to understand that. When I'm log in to these webinars, today is barely interesting because we already did that 12 hours ago. So now it's more like, how's this going to set up in the next few hours? Will we come down? Will we hit today's target? Will we retrace back up? And are we going to have an opportunity to sell this hard? Is this the beginning of a new trend Will this be our lower high, lower low tomorrow? Or is it just going to be a one-off lower, one-off lower? So right now it's all about, will we get our lower high? And if so, what am I going to do? I'm going to fire for effect. And if you're not in the military, it means if one mortar will do the job, drop 6 or 7. If you're from Dubai, what it means, if you're going to build a skyscraper, build 6 or 7. That used to be a rule in Dubai, by the way. If you're going to build one, might as well build 7. Drop it like it's hot. Make it wane. Yeah, right, Carlos. Johnny. Gee whiz. I sit at my desk so much. Oh my God. I'm sitting at my desk so much. Well, why don't we call it a day? You guys going to be here tomorrow? Let me ask you a few things. Please like, please subscribe, please leave comments. Please subscribe to my FX Bootcamp channel as well. I'm trying to get that back up above 10,000 subscribers. The reason is that unlocks some features that YouTube offers. youtube.com/FXBootcamp. So that'd be really cool. Please visit tradersway.com, open a demo account and thank them. Right? Take an opportunity to thank Traders Way for making this happen. Namaste, Traders Way. Throw your diamonds in the sky. Huh? Thank you, Traders Way. Huh? What do you guys want to do tomorrow? Well, we got Ripper Awesome News, as you saw on the Forex.Today YouTube site, or Forex.Today website. No, Jim, but I think we'll decide tonight. Okay, I think we'll decide tonight. See, the other issue is I'd like to have some consistency as well, right? I'd like to have some consistency. So the other thought is, if we did every day at 5 p.m., that would work as well. I could do that Sundays, and that's when the market opens on Sunday. Everything but oil. And then what? And then Monday at 5, that's before my first class on Monday. And then every other day at 5. So it might be better at 5 than 6. Every day at 5. Sunday at 5, Monday at 5, Tuesday at 5, Wednesday at 5, Thursday at 5. And that would, the way I'm thinking is that would make it easy for our European friends to log in. Mr. Heivelt needs more beauty sleep. How does that work for you, Maida? Is 5 okay? Cool. Oh, and yeah. What else? Yeah, it works better in Europe and stuff. Tonight, 5 or is it even better? Well, I guess what I can do is I can send out an email saying 5 and see what percentage of people totally freak out. Right? My life gets pretty exciting sometimes. Oh my God! You changed it to 5. But we are trying to figure this out. Yeah. And by the way, what we're talking about is our day trading, swing trading group. You guys feel free to join if you want. All right, so maybe we'll try it for 5 tonight. I'll send out an email. Okay, lots of people say yep. Lots of vocal people said yep. So squeaky wheel gets the grease. I'll send out email. Let's plan on meeting at 8. If you want to join, visit swing.fxbootcamp.com. Yes, I'm Eastern Time. New York City, baby! Yeah, I think probably earlier is better for our South African brothers and sisters. No, let's do 5. I'll send out an email. Let's see how that works. Means I have to push my meal I have with my wife and my children. We'll have to push that off to 6:30. So like it affects more people than just myself, but we'll figure that out. So let's try it tonight at 5 and see how she goes. All right. Peace on earth. May the pips be with you. May your profits be above average. Stay healthy. Stay safe. Stay alive.